2, 1.
What's up, everybody out there? Welcome to the Coach's Playbook. We're trying something new today. It might be the first time. It might be the last time. We'll see how contentious it gets. Title of today's episode is called, Dan, was it the Meltup and Who Melts Down?
Yep.
All right, before we get to Trader Shoutout, what we're going to do is, because we're kind of in the middle of one of these market melt-ups right now, is we're going to take sides on whether there's going to be a crash or not right now, pretty much, or whether the outlook is good or bad. But we don't get to have our own opinions, so we're going to do games of chance to randomly assign 2 or 3 of us to one side and 2 or 3 of us to the other, and then we're going to fight it out. But first, Mick, who just popped in 4 seconds before we went live, so I don't even know the answer to this question. Do you have a trader shout today, or
I do, yes. Shout out to Stone Yan. He's up 2,800 and trading the NASDAQ right now.
Nice. How's Reva doing? I see your dog in the background.
She's sleeping, shedding a little bit, getting fur all over my comforter back there behind me. But yeah, she's my sidekick during the day. She's either on the bed behind me or inconveniently under my feet, or even worse, behind my chair. So I'm locked at my desk. And
or worst of all, trading the NQ herself. Okay, so let's get this on. I brought out a couple different games of chance. So for the first one, we'll start simple. Dan, I have a coin in front of me.
Okay.
Heads, the market's up. Tails, it falls on its tail. What do you got?
Well, so that I'm picking.
I'm flipping it. You can't see it. It's below my camera.
Right, you said heads. Am I picking a side?
Well, I'm going to flip the coin.
Okay, then just flip the coin. I don't get to pick then. I don't get to pick.
Well, you don't know what the coin's going to be, Dan, so you
Jack, you just need to say,
well, you said if heads,
you're bullish, tails, you're bearish, and you flip it and you say, Danny, this is what you got.
Yeah.
Dan, you're a bull. JD.
Okay.
Up or down with the tennis racket logo. This is how you flip who gets to serve, all right? Down, the market's down. Up, it's up. It's down. JD.
All right. The dancing bear.
And with the last 2, you jokers. So we have 1 up, 1 down right now.
He's going to pull out an English muffin or something like that.
No, I'm going to pull out these Key West playing cards that I got when I took the ferry a while back. All right. 2 of these are jokers. 1 of them is not. JD, pick one of these 3 cards. Middle, this, or this. Left.
JD's
this is my left. This is right.
JD's a bear.
You want this one? Yeah. This one? You're a joker. So we'll say that means market down. Hogue, this card or this card?
This one.
This one?
Or this one?
This one. This one. You 2 are a joker. Down. So
down.
Strangely enough, me and Dan are the bulls. Who does the master? Mick, do you have a team yet?
I don't.
Okay, you can choose whichever you want. You're the wild card. All right, so let's get it started. Dan, I hope you love this trading show. Dan, full case, get us started.
Well, right now, I think the biggest thing is we've seen a lot of hits to this marketplace, and well, it just keeps going. There's no really stopping it. We have this Delta variant and possible COVID outbreak. They're really hitting us hard with some of the language being used around it. We're seeing worse numbers than we saw last year, yet we're still going higher. I don't think there's any arguing that. We just added 10 million jobs to the marketplace, the biggest number we've ever seen. People are getting involved. I mean, Robinhood, which just had an awful year last year with some of the questionable things that happened. I'm not even going to get into that. But they just IPO'd at $32 or $38. That thing rallied 100%. See, people are still buying. I don't see how you can be willing to sell this market. There's just not a chance.
JD, tell Dan why he's an idiot.
Let's be nice. Let's be nice. There's 2
sides
I want
to
every story.
Be like, we all like each other. We can do this.
I think that there are still some pretty positive things out there. Dan mentioned unemployment. I think for the first time in history, there are more jobs available than there are people actively looking for jobs.
Thanks for supporting my defense.
I'm going to support it a little before I burn it. The Fed's still printing money. Our government's still spending the money. This is good for stocks. We're coming off the 11-year bull run ended last year, so there's fresh money coming back in the market, but it still feels kind of bloated, overweighted. I follow a couple like meme accounts on Twitter, like fintech meme accounts. And there's this one guy I follow. I won't tell you who it is, but you probably have seen him. What he does is like he likes to put actual context behind headlines. So I was scrolling through my feed today, and it said a headline was S&P 500 and Dow Jones hit new record highs, and then below it says missing context. 460 out of the 500 S&P stocks did not make new highs, and 28 of the 30 Dow stocks did not make new highs either. So it's kind of like a grapefruit balancing on a toothpick kind of thing. And as you see, as we're steadily rising higher,
and that grapefruit is pushing into the toothpick, and the toothpick's just going to stay stronger and stronger.
I mean, eventually, not on the same scale as last year, but pullbacks do happen. Corrections are good. I think as volume continues to just flatten out, we might get a blow off day and then take out the last 3 months of gains overnight.
Yeah. Well, it's a real shame that I have to be on the bull side here, because that's not where I have my most fun cracking down.
Show your cards.
You can't say that.
Okay, listen, I'm going to tell you why.
In it to win it.
In it to win it. This is why it keeps on going. The Fed. I saw today that I forget if it was in the Wall Street Journal or something along those lines, that people were saying that Powell's, because of progressive calls for him from sort of the other side, might endanger his second term. Now, Powell is a pretty accommodative guy when it comes to the money. If they're getting rid of Powell to go with someone that would be more progressive, what does that mean? I can only imagine means they find someone even more accommodating than Powell, right? And that does what to the stock market, everybody? It goes up, and it'll just keep on going up until, I don't know. Like, I just think this, like, if you told me at the beginning of COVID that we were going to be sitting here at 44.35 as we record this on the S&P 500, I thought before COVID started at 33 was too high, but now I have been beaten down. It's like that last scene of 1984 where he says that he loves Big Brother. All right. I was bearish for a long time. It brought me nothing but pain and guilt. And I just felt awful. And I have finally gone the other way. And I say, I love the S&P 500. I love Jay Powell. It's all good. It's going up. That is where I stand right now. So, Hogue, it's your turn to tell me why I'm wrong. And then we're going to see where Mick stands in real life.
Well, it's been so long. I almost forgot that I was actually a bear. If you guys remember,
we need that clip, by the way.
If you remember,
old age does that to you, by the way.
Hey, easy now. We're gonna get contentious, huh? If you guys remember, at the beginning of 2020, like around Christmas 2019, we all talked about where we thought the stock market was going to go by the end of the following year. If you remember, mine was Dow 35,000. We're finally there. And the fact that Jack likes the market so much, it's got to be the high.
The old indicator. What is it that you always say? The market always looks
the best at the top.
The best when Jack says to buy, and the worst when Jack says to sell. All right, good. Well, Mick, what you got for us?
Yeah, let's do it. Well, I really like that, Jack. I mean, this is an indicator, as John mentioned, you being bearish and then, getting bullish at the very tops, something's bound to happen. But I'm going to park myself in the bull camp for one reason, and really one reason only. I like technical analysis. We are making new highs until I see, so we're making higher highs and we're making higher lows. And until we start seeing these markets on the higher time frame making lower highs and lower lows, I just have to say that, the bull market's intact. So until we start seeing lower highs on the higher time frame charts, we are still in a bull market. I think technically you need to see two lower highs as big swings to be able to say that the bull market is over and we might be in a bear market. So just wanted to make it clear, simple, 1 point. That's my spiel.
Well, I think the bears have been proven wrong by technical analysis, by science, by fact. You old timers over there.
300 years of economic data. Where do you want to start?
Yeah.
I mean, go ahead, Mick.
I was just going to say, I kind of want to add one more thing is like, I can't say I'm bearish until I see something that's actually bearish on a chart. So we're grinding higher. I'm not going to say I have no reason to say I'm bearish. You can come up with any, macroeconomic data you want, talk about the Fed and stuff like that. But until I'm seeing it on the charts, I'm not going to be someone who tries to predict well in advance of things and then slowly gets cut to pieces as we continue higher for however long it might be.
Well, we've all done that. And I think the true indicator for when the top is truly in is when JD starts to think it's going higher.
And is it possible? Can I share my screen here? Can I share a chart?
Hang on. Let me yes, you can.
All right. Let me take a look at this, see if this works here. It's only let me share my desktop. Dan, could you pull up a daily chart of the ES futures?
Oh man, you're killing me here, Smalls. Give me a second.
You want the continuation chart, or you want
just an idea of as we make our bull case, what Mick says about the technical analysis, I just wanted to behold the abject straight line going upward that is the daily S&P chart.
You want a quick? I can share a quick one.
You got one real quick? I don't have one up on this computer.
I'm a bear. It's all wrong.
Yeah, turn it upside down, right, Hogue?
Yeah, there you go.
You guys seeing it?
Yep.
Yes.
All right. Now,
daily continuous chart of the ES.
Guys, gals, people out there, look at this chart. Does this look like a chart that you would want to get short? JD, the bear, Hogue, the bear. Is this something that you could go on your show in the morning, Hogue, and say, I want to short this?
I could, but nobody'd watch.
Yeah.
Well, no one watches anyway, but that's besides the point.
I am a contrarian by nature. Like, I enjoy fading a market, but picking tops like this around here is just dangerous. Like Mick said, it's death by 1,000 cuts trying to catch a move to the downside here.
Well, exactly. I mean, when you look at something like this is truly. Oh, you've been around. Have you seen charts like this? I've just been in awe, and I was several months ago looking at it. Like looking at it now, it's just every day that goes by, every week that goes by, it just gets more surreal to see.
Well, I've been in and around the S&Ps for 30 years, and if there's one thing I know about them, it's they eat shorts. The S&Ps eat shorts. You have short time frame traders always trying to pick the high and trying to catch that big down move. Unfortunately, they're probably going to lose more than they're going to ever make on those big moves down because they usually miss them anyway. They don't have the knowledge or the skills to trade into that kind of stuff. So,
and it's so difficult to pick your timing on that too.
Oh, 100%.
Well, I'm going to drop my facade a little bit to talk about an important point that Hogue brought up here with shorting things like this is that if you look statistically, trading, you already know, trading futures is a very hard thing to be profitable at, right? It is not an easy thing to do. And the percentages that you're right, if you're a good trader, are, closer to 60% if you're really good or something like that. So if you're going short, I mean, even if you're a bear, right? We all realize that this market's long-term trend, just like based on real fundamental economic factors, and by real, I mean like technology, things like that it's going to go up over time. So what you're doing is taking something that's kind of a low, there's not a lot of gap between being right and wrong. And then you're tilting it against your favor by betting against what will be the long run direction. So that's something to think about. If you're going short as much as you're going long, kind of in the long run, it would seem to suggest, unless you're extremely good at having a system pick those things, that you're going to get into a lot of trouble.
Yeah, I want to point out one thing here too. As we're looking at this chart, I mean, look at the periods of time where we have these up moves, and then any down, the little sell-offs, they last a matter of days, and then we're spending more days going up and fewer days going down. So the windows of the sell-offs are so much smaller than the windows of the rallies.
Yeah. It's been shocking, just the resiliency to see everything. Every time, a few weeks ago, there was that big, you could see it right there on the chart, that big down Friday a few weeks back. That seemed like something changing in the market. I think the VIX, popped like 30% or something that day. And then it was like, well, we've had the weekend to think about it and we're still grinding higher. So I think that's what it is. So, JD or Hogue, is there anything else? And Mick, you can stop sharing this if you want, unless
Got it.
For whatever reason, I always have one of those in the background. I just didn't want to show my whole desktop. It's not even my computer. This is the one I took from the office. Don't tell anyone. I'm bringing it back. We're changing offices.
So yeah, if there's one thing we know about the S&P, other than what Hogue said, it's they don't like retailer traders going along for the ride. So there will be a purge. They're going to run those sell stops eventually. It's just a matter of time.
We'll take I wasn't allowed to say it because I was on the bull side when Dan was talking about Robinhood stock. Like, there's something where it opened up way at the low end of its IPO range. And my guess is, from looking at the price action thereafter, that there was a lot of people in there shorting it because out of spite, maybe. I don't know, that they just don't like, I'm serious, that they just don't like it. And I think it just made a juicy target for like an actual squeeze.
A hate sale, as they call it.
Yeah. Well, stay away from those. Like, nothing good can come of that. I mean, unless you've done your research and you hate something for good reason, if you really believe in it, sure. But with something like Robinhood, it was set up pretty well for a squeeze. Frankly. What?
We have a slight issue. There we go. Not sure what happened there. It kicked me out of my stream there. We're back in. It was just staring at the desktop on my computer for a moment. Glad I caught that.
That's good.
Oh, awfully convenient. It happened when Jack was speaking too.
Right?
Yeah. Do you know when it cut out?
It's fixed. I couldn't tell you.
Cool.
It's coming, everyone. I apologize. It was a long time too. I think it was when we must have happened when we. There we go. We're up on the screen now. You can see me.
It must have.
All right. Could they still hear us the whole time?
Was it the?
They could hear. Yeah, everything could be heard.
Oh, good. I'm glad right there. I thought we were off. I didn't start talking all sorts of. I'm always confused at what language I can actually use on here versus what. I got to look at the brand guidelines. But we were discussing, the Robinhood stuff is right now something like that. I think that's kind of a symptom of this kind of frothy market top. I wouldn't go anywhere around trading Robinhood stock right now or something like that, personally.
No. I think it was a good example of people getting interested and more people buying.
Exactly. Well,
I'd be selling the hell out of my Robinhood stock right now if I had it.
Yeah, if I had it, but I wouldn't if I didn't. Right. So there's a big difference between owning something and selling it and then going short, right?
Yeah.
But we all love Robinhood here, right, guys?
Yeah. Best gambling parlor in the out there.
I just had to sit through a thing with legal requirements mix, so I can't remember if we should do that or not. Anyway, we're coming towards the end here. Anyone have any true no wrestling heel things? How do you feel right now about the indices or this market in general?
Well, one thing I just want to point out there, I think a lot of people still think older, you still think of the crash in, 80s and going back. And that's kind of this idea of what a sell-off really is, because that's that Hollywood vision of it, right? That's that crazy excitement. And I think a lot of newer traders sit here and look at it and go, no, I never want to be a part of that. But there is that desire to essentially be a part of that and be able to talk about that one day. Market state and how this market moves and how money is handled these days is completely different than it was back in the 80s or in the 90s or even in the early 2000s. There was pits, things closed. There were breaks. It was human to human. Right now, with it being computers, we know that the vast majority of trades are no longer human based. They are technology and computer based. So it's a very different world that we're trading in versus back in 87, right? I mean, Hogue can probably tell you how much different it is now versus 87. I probably couldn't. I wasn't really around then, but computers are so involved now. We've seen quote unquote crashes or sell-offs or whatever you want to call it a couple times over the last few years. We've seen fallen into correction territory, 30+% down. Those are huge percentages and even bigger numbers and point value when you look at the prior crashes that we've had over the history of the stock market. But look at how quickly they've recovered. Whereas in 87, recovery takes a lot longer when it's human to human. But because this is computers and because there are systems that click in, when it happens, don't feel like you have to be bearish for months and months. It's very quick to see these things turn around. So just be conscious of that. Mick made a great point to say, don't make any decision until the market is telling you otherwise.
Yeah. And like the 87, a lot of the sell up there, Hotel, if I'm wrong, also involved people did not know what their positions were. The computers have solved some of those problems. I still worry about something closer to an 08 situation where because of computers, you get such complicated derivatives positions that one day you look and you're like, holy yes, we just wiped out all the equity of this company.
Crash.
Yeah, that could happen. It could happen very quickly and without really knowing. I love the film Margin Call. If you've seen it, that's a fun example if you want a good trading adjacent movie. But I know Dan has to go and help someone move soon. So we'll maybe leave it there for now. Or Dan, do you have any words of inspiration beyond that for us?
I do. I kind of like this one. It comes from Bernard Barach. I don't know who that is, but I love the quote. The main purpose of the stock market is to make fools out of as many men as possible.
Yeah. What was it? The Warren Buffett is that it's transferring money from the stock market is the mechanism to transfer money from the impatient to the patient.
That was going to be the quote until I looked back over at this thing and I saw that one. And I was like, well, that's a lot more fun.
Well, thank you. I've enjoyed not being fun, but we will be here next week, maybe doing more PTI-esque stuff. Frankly, there's just like less to talk about because this market's been grinding in one direction for so long. I feel like there's nothing new. It's like Groundhog's Day every week. So, give me something to hope about.
Well, one thing that's for sure in trading is change. Things will change. Things are going to change. Prices change, market states change, people change, markets change. It's all in front of you. The markets are telling us what they're going to do. It's just a matter of being able to read it correctly. So like Mick says, look at the charts, make your own decisions. Don't listen to the talking heads on the TV.
Except for us.
You're what's that?
Except for us.
Except for us.
We're not on TV, I guess.
Right. Because it's your decision, it's your job, and you can find ways to make money at this. This I know. Trade well, everyone.
All right, we'll see you next week.